Hello, everybody. Welcome to a new episode of the Dissenter. I'm your host, as always, Ricardo Lopes, and today I'm joined by Dr. Branko Milanović. He is Presidential Professor at the Graduate Center and the Senior Fellow at the Stone Center on Socio-Economic Inequality at the City University of New York. His main area of work is economic income inequality in individual countries and globally, as well as historically among pre-industrial societies, and even inequality in soccer. And today we're going to focus mostly on his book, Capitalism Alone. So Dr. Milanović, welcome to the show. It's a pleasure to everyone.
Well, thank you very much for inviting me. It's a pleasure to be here.
Great. So could you start by defining capitalism?
Well, in the book, it's defined, it's not an original definition. The definition goes back to Marx and also to Max Weber. It's defined in a very simple and I think very, succinct way. It is a system where most of capital is privately owned and the production is done for profit. So that's number one. Labor is a hired labor. So the labor does not have managerial function. That's number two. And number three is that the coordination of economic decision-making is decentralized. So different companies, different individuals make their own decisions. There is no central authority, central planning, or anybody like that to make decisions.
Mm-hmm. In the book, you distinguish between different types of capitalism, like classical capitalism, social democratic capitalism, and liberal meritocratic capitalism. Could you tell us about those different kinds?
Yes, I distinguish, of course, the main distinction in the book is between what I call in the book liberal or meritocratic capitalism, exemplified by the United States, and political capitalism, exemplified by China. I do also mention classical capitalism in order for the reader to understand the difference between today's capitalism and the classical capitalism. So without going into too many definitions, because it becomes kind of complicated, let me just say that the classical capitalism of the Ricardo Marx kind is the capitalism where you have workers and capitalists, and there is practically no overlap between these two. In other words, all capitalists have income only from property, all workers have income only from labor, and basically capitalists are always richer than workers. It's a very simplified view of reality. It was not even fully true at that time, but at least at that time, they were, of course, it was at least more sort of adequate representation of reality. Whereas it is not an adequate representation of reality today, because we have today among very rich people, also people who have labor incomes. So that cleavage, which was very clear maybe in the 19th century, Western Europe and the United States, is not existent or is not as clear today as it was then. Now, to go back to what you actually asked me about liberal versus political capitalism, the liberal capitalism of US type is, of course, differs from the political capitalism of the Chinese type by the difference in the role of the state, by, of course, democratic setup, whereas Chinese setup is not democratic. And in the economic sphere, a much greater role of the state exists, obviously, in the Chinese case. One should not, however, I have to mention that should not, in my opinion, overplay or exaggerate that difference, because under sort of Western capitalism, also the role of the state was often quite important. And I'm not taking some extreme cases, but I'm just taking, for example, the case of France in the 1970s, 1980s, Turkey in the 50s, 60s, 70s, Brazil, and obviously South Korea, for example, or Japan, where the role of the state was quite significant. So I would say that, all these regimes, if you will, economic regimes on a continuum.
Mm-hmm. I think there's another distinction here that you talk about in the book, and it's important to mention here. You make a distinction between capital-rich and labor-rich people. Could you tell us about that, and do these correspond to different socioeconomic strata?
Yes, this is actually, I already alluded to that, to the fact that under the classical capitalism, you had practically only one source of income, either capital or labor. Of course, there was a large class that we leave out because it is not easy to disentangle. It's like the class of small owners, for example, what is called in Marxist terminology the petty bourgeoisie. So that middle class always existed, but the two antagonistic classes, or two important classes, were capitalists who had, of course, income from ownership, and workers who had income from labor. Now, what I meant by this distinction that you mentioned, labor rich and capital rich, is that nowadays we have at the very top of the income distribution in rich countries, developed countries, we have the top 10% who are at the same time rich in terms of labor income. For example, they could be, doctors or engineers, software developers, CEOs of companies. So they receive very high labor income. But on the other hand, they have sufficient wealth, financial wealth, to also receive significant incomes from ownership of capital. So this is something that I call in the book, this is a new term, so I had to kind of go and look at the Greek words and to create a sort of neologism. I call that homoplutia, meaning in the two words mean homo means the same, plutia means wealth. And what I wanted to indicate by that is that that particular group of people at the top are wealthy, as it were, both in terms of what is called human capital, or at least skills, and in terms of financial assets. So this is a new development, which, as I said, did not exist even 50 years ago, and much less under classical capitalism.
Mm-hmm. Going back to China, do you think that with its international success, we should expect to see its sort of political capitalism spread across the globe?
Yes, this is one of the big questions, and I address it in the book. Okay, let me sort of back up a little bit and say that when you have a country which has been the most successful in terms of growth over two generations, we are talking now about 40 years of really uninterrupted high growth in China. That country, even if it started from a very poor position, being poor, and now it is just barely sort of upper middle, well, sort of middle class in the world sort of ranking, that country, by that very fact, would actually call for many imitators. In other words, in this world, we of course look at who is doing well, who is doing badly, and then we tend to imitate those who do well. However, China is still not a rich country. And secondly, many of the Chinese characteristics which have made it possible for China to grow so fast are not easily reproducible in other countries. And also, China, until recently, did not show much interest in sort of selling, if I can call it like that, its own model. Nor did it actually create the model in a way in which it was easy to implement for others. I just want to contrast that with the model, the American model, which is relatively easy to comprehend and to implement. I mean, if that model, if you go to a country which has greater state ownership than you think desirable, you say, okay, let's privatize, let it deregulate, let prices reflect scarcities, let markets work, let reduce the role of the trade unions. So really you have, as it was done in the Washington Consensus, you have 10 rules that you can implement whether you go to Zambia or you go to Angola or to any country, which of course was to some extent, to a large extent, criticized because, one size doesn't fit all. But in order to sell your model, you do have to have something which seems implementable and relatively easy to understand. China doesn't have that yet. I think China is now in the process of sort of designing how to sell its model, but it doesn't have it yet because many of the reforms, many of the changes which turned out to have been very good or efficient for China were done as on a trial and error basis. They were done in individual parts of China. We see now, for example, that approach continuing, for example, with even common prosperity is not applied in the entire China, but only in a couple of provinces. So this is the approach which is very China specific. And that makes it more difficult to apply elsewhere when you do not have ability to decentralize as much as China did, because China is a big country where it could decentralize. And on the other hand, where you have also, where you do not have, like China does, a centralized party that sort of is able to at the same time decentralize decision making and on the other hand implement certain policies centrally. In many countries, I'll finish there, for example, in Africa, you might decentralize things, but you do not have a strong state that can actually implement certain things, or when things do not go well, that can actually change the type of reforms that is implemented. So the Chinese combination is a very unique.
Mm-hmm. With some hindsight, what can we say about the place of communism in history, its role in history?
You know, this is a good question, because this is one of the motivations in chapter 3, where I discussed the Chinese experience. Many people who do not read that chapter, but read about what was written about it and what I wrote also in some pieces, like the piece in Foreign Affairs, start from the sort of a view that I'm just dealing with China as an example of political capitalism, and that they could use, actually, you can use other countries which are similar for that. But my point was a little bit different. My point was to explain what is the genesis of China today. In other words, I think you cannot understand that unless you sort of realize that in the Chinese case, Vietnamese, and I give other examples like Algeria, Laos, Angola, Singapore, to Malaysia also, you had, and of course China is the most sort of best example in some sense, you had the role of communism and left-wing parties had the double role, and that was national liberation against sort of course, foreigners who either colonized the country or semi-colonized, because China was not colonized, but obviously, but was semi-colonized. So that was the task number 1. And 2, breaking all feudal institutions which were growth retarding. And in case of China, this was, of course, in, the fact that it was a country that had like over 90% illiteracy rate, where actually women were systematically discriminated, where education was scarce, where health conditions were very bad, which are extremely bad. So that left-wing party or communist party, in the case of China, had this double role which it fulfilled. But then, by sort of irony of fate, actually, the big success of China was essentially reintroduction of capitalism and of a creation of the domestic bourgeoisie, which now exists in China. So in that sense, communist parties and communism in China from, like, suppose 1949 to approximately 79 had a very similar role to what bourgeoisies in the West had. It was really a transformation of a quasi-feudal system into a system that enabled capitalism to grow. And that was, of course, a reversal of the typical Marxist, historical expectation of the structure, where communism would follow upon capitalism after capitalism has developed all the, productive forces. In the case of China and Vietnam, we have had actually the opposite development. We had actually communism making capitalism possible. And that, I think, is an important insight. I actually wish people would read that first part of chapter 3 more carefully, because it has a very strong historical component. It deals with the role of Comintern in the 1920s and all these changes, which I think were absolutely crucial for the emergence of China that we know today.
But can we say that communism was successful in China or anywhere else?
I would not say it was successful because although there is a degree where it was the difference between less developed countries and more developed countries. In the less developed countries, communism was more successful than in the more developed countries. Just to give a simple example, countries like Czechoslovakia that were very industrially developed really had fairly low rate of growth with their capitalist comparators. On the other hand, countries like Mongolia, for example, which were fairly underdeveloped, and even in Southeast Europe, like countries like Yugoslavia and Bulgaria, had fairly good growth rates in comparison to their capitalist comparators. But what I'm actually pointing out in the case of China was that, and of course, as I said, Vietnam as well, was that very peculiar situation where I think that this double revolution, which was national independence plus destruction of feudal institutions, could be conducted only by the left-wing parties. And even in India, where of course you didn't have as strong as Communist Party, the left-wing approach was, and of course that was based on the Fabianism and also imitation, very often imitation of the Soviet model, including with planning in India. Only the left-wing parties could effectively break the stranglehold of landlords and of feudal institutions on those countries. And also only such parties, when they were when they were centralized and committed to change, could also liberate the countries. So, as I said, this is a little bit a different role that communism had compared to what you read normally in the Marxist literature or what actually Marx might have expected. Although, this is also a little bit complicated because Marx, towards the end of his life, paid much greater attention than before to the developments in China and India. So he saw the importance of these countries for the worldwide development.
Mm-hmm. Would you look at communism as an alternative to capitalism? And if so, would it still be a viable alternative?
No, I don't think. I actually mentioned in the book, it is the system of the past. It's not the system of the future. At least communism in the form that we have seen it, which again is relatively easily defined, like state ownerships of the means of production and central planning. And we don't see the demand for either of these two elements practically anywhere. We are not seeing demands to nationalize even companies that are sort of really behaving like large monopolies, but nobody's talking about nationalizing, Facebook or Google. And on the other hand, nobody's really talking about centralized decision making. So I do not see the demand for that anymore. But the question that I had in mind was to look at what was the global historical role of that system. So in other words, was that a system that actually did not have a sort of a role that we could define? Was it like totally sort of out of a blue and then just went nowhere? Or did it have a historical role? And what I just explained in the previous question, I think that we can actually see what was the global historical role. And it was really the development of non-European, or actually in particular Asian countries, and bringing them to the level at which they were at some point in history, and then enabling domestic capitalist class to be formed and to push forward the development of those countries.
Mm-hmm. Let's talk now about economic inequality. So first of all, how is it measured? Is really the Gini coefficient the best way of doing so?
No, the Gini coefficient is one of the ways of doing that. And the Gini coefficient, like all synthetic measures, synthetic means that they take into account the entire distribution but also squeeze that entire distribution into one number. So there are different measures. Gini is one of them, tail indicator is another, standard deviation of logs is the third one, and so on. So each of them has certain advantages and disadvantages. The Gini coefficient has certain advantages, including the fact that it includes, of course, in the calculation every individual, that it does a sum of mutual income differences. So in other words, it calculates my income in sort of respect to everybody else's income in that population that I'm looking at. And it is also easy because it really ranges between 0, when you have everybody have the same income, and the value of 1, where one person or one household then has the entire income of that society. Both of them obviously are the extreme and not realistic cases, but we do have, very clear endpoints. But there are other measures, for example, like top 1% has become very popular. That's a very good measure if you want to look at the share of the richest people, or the top 5%, for example. But it is a measure that also has drawbacks, that it totally ignores what happens to the remaining 99%, because the remaining 99% can become much more unequal or more equal, and the top 1% can be still the same. In other words, what I want to say, if you look at the top 1%, you focus only on that portion of the distribution. You ignore everything else. But it is also, the top 1% has become a popular measure, and to some extent, it's actually kind of a, maybe intuitively a nicer measure, because people can relate to that. If I tell you that the top 1% has 20% of national income, that also means that everybody on average in that 1% has an income which is 20 times higher than the mean income of the country. So that is the advantage of that measure. But I think we should also always use several measures, because, as I said, some of them have advantage in one direction, the others have in the other direction. So there is no one measure that is ideal and that is good and that should be used all the time.
Mm-hmm. What trends are we seeing nowadays globally in terms of economic inequality?
This is a complicated question because of the effects of COVID. If you had asked me that question 2 years ago, the answer would have been relatively straightforward. So I have to start with the situation as it was 2 years ago. Mm-hmm. The situation then was that since the late 1990s, we have had a reduction in global inequality, where global inequality is defined as inequality between all citizens in the world, measuring their incomes in approximately the same way, and adjusting for the price differentials between the countries. In other words, prices are lower in India than in Norway, so we have to adjust for that by sort of increasing Indian incomes above the level that they would be if you just look at the exchange rate of the rupee against, for example, Norwegian crown. So there was a decline in global inequality, and it was driven by high rate of growth of China, later of India, but also other countries like Thailand, Indonesia, Vietnam, and so forth. So the story was relatively clear. So long as these countries continue growing, even if their inequality within themselves, or even if the inequality in the US increase, you would still have a reduction of global inequality. But that story got complicated for two reasons. First of all, China became sufficiently rich that its impact on reduction of global inequality started being very small. So even if China is now growing fast, currently being fast means like 4% per year, since it is sufficiently rich to be around the middle of the global income distribution, it no longer reduces global inequality. It doesn't add much, but it becomes more or less neutral. So the big engine of reduction of global inequality, that was China, is no longer there. So that was the first change. The second change was COVID. Now, COVID had very unequal effects on countries. For our purpose, the most important effect was a really significant negative growth of India. So when India, which is such a large country, had such a negative rate of growth, and African countries also had negative rates of growth, the fact is that these forces then push global inequality up. And that's why we probably, although the data are not in yet, are not available because it takes some time for the data to become available, we can say that probably for the first time since mid 1990s, we have sort of there is a stop to the decline of global inequality and possibly small increase in global inequality. On top of that, there were changes in inequality within countries. In many countries, inequality went up due to the COVID. For the reasons that we all know, is that actually people who were less skilled had a significant reduction in their jobs and significant reduction in their pay. But in some other countries, rich countries like the US, for example, inequality went down because of large government transfers that sometimes were 20% of GDP and that were targeted towards the middle class and the lower middle class. So as you can see, it's a very complex picture that cannot be really sort of explained and given in a few sentences. And it's a picture that is still evolving because COVID is still with us, unfortunately, and the changes are still taking place.
Mm-hmm. What drives economic inequality? What are the main factors there?
It's what I call an overdetermined variable, in the sense that depending what is your point of view, you can actually explain it differently. In other words, if your point of view is, let's say, globalization, then you would actually look at how different sectors, take the United States, how they have been affected by Chinese imports or by the outsourcing and so on. So, and you can basically explain it that way. But you can also explain by looking at how technological change took place and how certain types of labor were technologically found redundant, and how other types of labor, notably skilled labor, cooperated or were complementary with capital and became in a greater demand and probably became more productive. So there are different ways of looking at it. In my book, in Capitalism Alone, I mentioned 6 systemic inequalities under liberal capitalism, starting from the fact that the share of capital in national income has been rising currently, then that capital income or property income is much more unequally distributed, so that the increase in the share in the national accounts of capital quasi-automatically means an increased interpersonal inequality, because the incomes of those people at the top automatically become larger or increase more than the incomes of people who have labor on. And then you have the homoplutia that I mentioned already before. You have greater percentage of people with high income or high education who intermarry, which is a good development, because in some sense, people are obviously freer today to decide whom they want to partner with than in the past. But arithmetically, it does increase inequality. And then you have, of course, the effect of inequality on the political system, where the rich fund the election or the candidates. And finally, you have the effect of inequality on the educational system, where a very expensive private education makes it quasi impossible for the people from the middle class and lower middle class to send their children to such schools, and that perpetuates inequality. So as you can see, there are really different forces there that push inequality up. And of course, I should not forget that we have had in the US and in Western countries, we have had a period of the last 30 years where taxation of top incomes has become much lower than it used to be in the past, and where the ability to evade taxes has become much greater by the facility with which capital is being sent around the world. And as we have seen from the Panama Papers or the Pandora Papers, the rich have really taken huge advantage of tax havens.
So, is economic inequality a problem?
You know, economic inequality, I think, is a problem, and I will explain why. You know, many times people say, and that actually seems superficially correct, they say, well, why should I care about inequality if my income is good? I don't mind if Jeff Bezos has, 200 billion or 300 billion. What difference does it make to me? And as I said, superficially, yes, it seems okay. But let's look at actually the direct effect, negative effects of economic inequality. Let me start with this example that I just gave. The fact that somebody would have 300 billion per se may not mean very much to me or to you or to other people. However, that person, and Jeff Bezos is a good example, by virtue of having so much money, has two effects on the political sphere. The first one, or the opinion making in the country or the world. The first one is he's able, as many rich people are able, to have a disproportionate influence on the political process by making campaign contributions that are extremely concentrated and that, of course, then give power to the people whose policies are such that the rich people essentially fund them, because the rich people are not going to fund people who are going to make policies which are going to be against the rich. Secondly, people like Bezos, Bloomberg, and others have a huge influence through their control of media sources. So you already have two negative effects of high inequality. You see it through the media control and through sort of influence, disproportionate influence on the political process. But then you have other effects. Inequality is often empirically now shown to be bad for economic growth because essentially it doesn't allow people who have abilities but who do not have sufficient income, for example, to go to school or to find the best job, because sometimes finding the best job may be risky, or you might actually have to wait a long time and you don't have funds to fund that waiting period. So it actually eliminates one class or category of people from contributing to economic growth. And final negative effect, which is I think the most important, is also something that we empirically now can show. And this is the effect of high inequality on reduction of opportunities to the next generation. So in other words, we have now empirical data that show that very unequal countries are also the countries with low social mobility. So in other words, if you have very high inequality, that inequality gets perpetuated across generations and social mobility is reduced. So you really do not have equality of chances. And this is really bad both for economic growth and for justice in the sense of fairness, because people from different types of families have very unequal chances to succeed.
Is economic inequality a feature of capitalism? Is it inevitable?
Well, some inequality is always inevitable simply because obviously people are not the same. They do not work the same amount of time. They do not make the same decisions. Some of them are lucky, some of them are less lucky. And of course, there is a parental background which can never be totally equalized. Even if we were to open, as I'm actually arguing in the book, open the public schools and make them equal or better than private schools, there will be always some level of inequality which would remain. And actually, we know that empirically from socialist economies where ownership of capital was eliminated, you still had inequality. So there was no society that had, going back to the Gini number, that had inequality that was below what is, Gini of 0.2, which is about, half of the Gini coefficient of the United States, but nobody had the Gini coefficient of 0 or close to 0. It's just impossible. There are many other elements. There is also the question of life cycle. Some people have zero income now because they're studying, but then in the future they would have obviously a positive income. So inequality is inevitable. So it's not a feature only of capitalism. Inequality existed in socialism, it existed in feudalism, it exists by definition in slavery, it existed always. The question is actually, what is the amount of inequality that the society can afford so that inequality is used as an incentive to do better, to work harder, to study harder, to be more sort of thoughtful about decisions that you take, and to be more responsible for the decisions. And on the other hand, minimize the negative effects of inequality, of which I've talked in the previous question, especially the effect of inequality on social mobility. So the answer to answer your question, to answer it very clearly, yes, inequality is inevitable in any society, but it does not mean that any level of inequality is equally good or bad.
Mm-hmm. And how can we solve inequality then?
Well, we can never solve it, as my answer to this question shows. We can never solve it, nor should we solve it by having zero inequality. It is not feasible, and it would not be good. We should not also solve it by having very low inequality, because it would lead to the problems that existed under socialism, where you actually had very little incentive either to work or improve yourself or invent something new. So we should not solve it in that extreme version, but we should solve it certainly in equalizing opportunities of children from different types of families. Again, they would never be equal, because there is also parental effect. Some parents take greater care of their children, others take care less, maybe because they have less time, but there is never a full equality. We are not arguing, nobody can argue for a sort of a Platonian society of common raising of kids, state raising of children. So these are things that we should not, and nobody is arguing that we should go that way. But as I said, we should definitely, in my opinion, focus on several things. One is reduce the power of the rich over the political system, reduce the ability of the rich to influence the social sphere through the media control. I think it's a very important issue, which is often sort of not realized or not discussed sufficiently, and reduce the ability of families to sort of transfer these inequalities over time. And the last point can be done essentially through higher taxation of inheritance or higher taxation of wealth in general, and through great advantages given, or money given, to public education versus private education, so that the private education becomes sort of a secondary, and public education, including college education, becomes better and more sought after, which would then, of course, equalize the chances of kids from different parental background to go to top schools.
Mm-hmm. In the book, you refer to the fact that we cannot fight 21st century inequality with 20th century tools. What do you mean by that, and what would be some of the new tools we can adopt?
What I meant by that is that the social democratic tools that have been very efficient in the 20th century are no longer operative in the way that they were operative then. By that I mean that, for example, trade unions, which were really important contributors to reducing inequality in capitalist countries in the 20th century, cannot have the same role, simply because the type of work has changed. We do not have now a large companies, the sort of a Fordist economic system where you had many people physically in the same place with more or less the same objectives. So trade unions, as you know, have, in terms of participation into trade unions, have not only declined in the US, they have declined in all countries, including countries like Sweden and Norway and Germany. So the trade, that's one of the old tools. Also, a belief that simply by raising the number of years of education, you're also going to reduce the skill premium is not operative in the same way that it was operative in the past. In the 1950s, in many countries, you had an average level of number of years of schooling, which were 6, 7, 8. And of course, you get really a lot when you go from 6, 7 years of schooling to an average of 14 and 15. But once you're at that level, there is not much more to go. So, education is very important, but it is this equality of education that I've been talking before, not simply increasing the number of years of schooling simply because we do not have, that possibility anymore. Another tool which was quite efficient in the past was ability of the governments to control capital movements. You could not sort of move capital as easily now as you could as easily now. You couldn't do that in the past. Simply, first, there were government rules. Secondly, you were actually physically, it was harder for you to move it than today when you can do it electronically. That also cannot be brought back. You cannot sort of, put the ghost back in the bottle, because the technological ability to move capital like that exists. So these are the old tools, which I think are not bad tools, but we cannot expect that they would have efficacy which they had in the past. So what are the new tools? I already alluded to them. I actually make this point at the end of the book, where actually I wanted to be very, very brief in the recommendation parts, because I think that recommendations for each individual country are to some extent different. And so my point was increase in inheritance taxation and wealth taxation in order to enable essentially equality of opportunity. The second one was put public schooling on the top level by funding it much more and by making it more attractive and better, which is not difficult to do. If you pay professors in public schools twice as much as you pay them in private, they would all move to public. So it's really the question of money, of the funding. Third, make the elections or the electoral campaigns or political parties be funded from public money, so that you cut the ability of the rich to influence the political process. So these are, I think, fairly simple recommendations that can be sort of then further developed. And the fourth one is increase incentives for the middle class to hold capital, including workers' ownership in companies, which would then reduce the concentration of capital incomes at the top. So if you look at these four recommendations, they are pretty general, but I think they would actually give you tools to address inequality in a manner which is consistent with the inequality as it exists in the 21st century. So we should not expect to go back to social democracy of the 1970s. I think it is not in the cards. It will not work.
Mm-hmm. So those recommendations are associated with the move to what you call a people's or egalitarian capitalism?
Yes, they're associated with that, particularly that the last one that I mentioned, where I would see a greater share of capital incomes belonging to the middle class. The poor people in the US or any Western countries, like take Germany, for example, the bottom 30 to 35% of the population have about zero wealth or zero net wealth. So it's unlikely that you would be able to increase their share. But for the middle class, yes, you could actually. And I think that by giving different tax advantages to the middle class, by, for example, including insurance for very small deposit investors who are actually willing to invest and then to have capital income, which actually is happening nowadays through pension funds, but I think it should be more widespread. You would reduce the heavy concentration of capital among the top 10%, of which we spoke before, and then you would make it more possible to have, how should I say, increased capital share, which might come with robotics, artificial intelligence, and so forth, without at the same time having this automatic increase in inequality between individuals. So that was the idea. I'm not sure if it's fully understood, but I just want to say the following. If you have artificial intelligence, robotics, and other sort of forms increasing the capital share, And if most of the capital is held by 10%, you would have an automatic increase in the incomes of the rich. So you would have an automatic increase in inequality. But if you're able to spread that ownership of capital more broadly, then you really have less of this automatic transmission, and you do not have necessarily immediate increase in inequality. So that's the idea of the sort of advantages given to the middle class to have greater share of capital income or wealth.
Mm-hmm. When it comes to solutions, what is your take on universal basic income? Because people nowadays, at least in certain places, are talking a lot about it.
Yes. I was in the book rather skeptical for the reasons that are listed in the book. I don't need to go through all of them. One of them being also very high cost of the UBI. If you put UBI, Universal Basic Income, on top of the existing system. So you cannot have, simply fiscally, you cannot have the two systems working on top of each other. So if you have UBI, then you would have also to phase out some of the other systems which exist, whether it is Social Security, unemployment benefits, social welfare, which already exists. So actually, these are all elements that you would have to redesign. I also was not quite sure about the disincentive effect of UBI on work. And more fundamentally, I think that that working is one of the characteristics of humankind, which actually makes us into better individuals. So to encourage blanket non-work, it seems to me not to be a means, a way to create a good society. So these are the problems that I saw with you. But I have to say that the pandemic has made me change somewhat my opinion on that. All these other negative effects that I mentioned, they still remain. However, there is one positive effect that I was not aware and that I didn't highlight in the book. And that is that under conditions of exceptional gravity, as was the pandemic, where suddenly many people lost their jobs or could not even physically go to their jobs, UBI gives you a sort of an ability to transfer income almost instantaneously without having to go through parliamentary, or in the United States, congressional approval. So it does have an element of flexibility and automaticity, which we lack. And even the countries that have done it very fast, and they have actually delivered very strong support, had to go obviously through parliamentary approvals, which of course then means that it takes several months and they cannot react as quickly. So that's the advantage of UBI under exceptional conditions. And if I were to rewrite that section, I would have mentioned that. And this is maybe the only part of the book where I would have changed something compared to what I wrote 2 years ago.
Mm-hmm. Historically speaking, would you say that capitalism has been a net positive to societies across the globe?
Yes, I would say so, because the greatest successes in terms of economic development and better living, not only for the rich, but also for the middle class, and even for the poor, because we really do not have poverty in developed capitalist countries nearly in the way that it existed in the 19th century. Yes, so I would say absolutely it was a net positive. But I would also say, because we have really to look at things the way that they were, that the first stages of capitalism were practically in all countries extremely painful, that very often you had to chase a sort of people from their possessions, in particular, I mean, like the land possessions, to create a proletariat which only had its, labor power to sell and nothing else, where you had, as we know, like working hours that were 12 or 15 hours per day. And we had slavery also, which was an integral part of making capitalism a sort of more productive or actually extracting the surplus value from workers. So these first stages of capitalism were very painful. But when we look at the situation now, we are in a very different conditions, and it really has made incomes and comforts of life accessible to many people who normally under any other system would not have had.
Mm-hmm. So one last question. Do you think that it is in any way possible to predict the future of capitalism?
No, it is very difficult, but I would say, as what we, I think, can tell now for the medium term is the following. In my opinion, and that's actually something that I opened the book with, it is wrong to speak of the crisis of capitalism. It is wrong to speak of the crisis because in geographical coverage, capitalism has never been more powerful. That's why I called capitalism alone. It's the only mode of production that exists today. We do not have socialism. We do not have centralized planning. We do not have large nationalized companies. And we also do not have serfdom, where actually you do not have free labor. So we have really basically capitalism as the only mode of production, including in China, where about 80% of GDP is produced in private companies or private individuals, because, as you know, agriculture is still private, and it's small agriculture where it's basically farmers working on their own land. But it is obviously private. So we cannot speak of the crisis because geographically capitalism is much more powerful than ever in history. And secondly, we cannot speak of a crisis because capitalism has created new fields of activities, and it does create them every day. For example, by moving into our leisure activities, it's actually making money out of things that we never thought would be marketable. Like when you go and read, your Twitter or Facebook, and then of course others use that to sell you goods. It's a new market. That market didn't exist before. It's a new market where you actually can use your own car and become a taxi driver for like 2 hours a day. It's a new market when you can rent your apartment and become a renter for 5 days. So these are new markets that have been created, and they're, in that sense, the commodification or commercialization of our activities has become much more prevalent than it was in the past. So that's why I think for these two reasons that we cannot speak of the crisis of capitalism. But we do have, of course, problems with precisely that commodification of many activities, which makes certain activities that were historically non-marketable, transforms them into marketable activities, and to some extent maybe destroys our culture or the way that we have been used to living. It raises also the question of what is the purpose of the family. I mentioned that in chapter 5. So it does raise a number of ethical questions that we have not solved, and maybe that commodification by itself cannot solve them. So this would be I would say, the negatives. They're mostly on the ethical basis, giving up your right to free speech by signing the non-disclosure agreements. That's also purely, commodifying your right to speech. It's a new market, as it were. So these are the negative effects of this complete dominance of capitalism.
Mm-hmm. So I will be leaving a link to the book in the description box of the interview. Apart from that, Dr. Milanović, would you like to mention any places on the internet where people can find your work?
Well, they can easily find me. I cannot now tell you the exact, because I don't know the exact addresses of the webs, but they can just by typing my name. But I would like simply to mention my blog and my Substack. My blog is called Global Inequality. It's very easily found. You can actually just type my name and then Global Inequality. And then I publish there approximately 30 to 40 posts a year with the themes that that would not seem unfamiliar to people that would listen this podcast. And they can also look at Substack, where I also publish things that I started actually more recently. And I think that would be a good way to start. And obviously, I would be very happy to have more people read Capitalism Alone, but also the book that was previously done and that we also talked a little bit today, which is called Global Inequality, which deals with inequality at the global level, as the title says, and with the rise of China, the effects that it has on inequality, and which also introduces what became quite well known as the elephant chart. So maybe these are the places to find me.
Mm-hmm. So, Dr. Milanović, thank you so much for your time, and it's been a real pleasure to talk to you.
Thank you very much for really asking me very sharp and very good questions, and letting me summarize my work, and in particular Capitalism Alone. So thank you very much. It was a pleasure.
Hi guys, thank you for watching this interview until the end. If you like what I'm doing, please share it, leave a like, hit the subscription button, all of those things you already know. And please consider supporting the show either on PayPal or Patreon. All of the links will be in the description box of the interview, starting at $1 per month, so it would be a great help. This show is brought to you by Enlights, Learning and Development Done Differently. Check their website at enlights.com. I would also like to give a huge thank you to my main patrons and PayPal supporters: Karen Litske and Blanchett, Perga Larson, Lau Guerrero, Francis Ford, Hans Frederick Sunder, Ricardo Vladimiro, Greg Healy, Adam Castle, Olaf Alex, Jonathan Wiesel, Jacob Klinkby, Matthew Whittingbird, Arno Wolf, Tim Hollis, Eric Alenia, John Connors, Paulina Barron, Philip Force Connolly, Jerry Mueller, Herbert Gintis, Rutger Vosbo, Weingard, Rebecca Newberger Goldstein, Dan Demetrio, Robert Windager, Rui Narcio, Arthur Coe, Zup, Marco Neves, Colin Holbrook, Susan Pinker, Bernardo Seixas, Pablo Santurbano, Simon Colombo, Jorge Espinha, Phil Kavanagh, Mark Blythe, Roberto Inguanzo, Michael Stormir, Eric Neumann, Samuel Andreev, Tiago Nunes, Bernard Ugni, Alexander Dunbauer, Fergal Cusson, Evan Bodrenko, Al Herzog, Don Ross, Jonathan Librant, Oslam Bulut, Nathan Nguyen, Stanton T, Samuel Correa, Eric Hines, Mark Smith, J.W., João Eira, Tom Hummel, David Sloan Wilson, Yacila Dez Araújo, Eden Solon, Romain Roach, Dmitry Grigoriev, Diego Londoño Correa, Tom Roth, Yannick Punter, Adana Rusmani, Charlotte Bliss, Nicole Barbaro, Adam Hunt, Pavel Ostazewski, Nelek Bach, Catherine and Patrick Tobin, Al Ortiz, Guy Madison, Gary G. Hellman, João Linhares, Lida Cosmidis, Sam Afzal, Adrian Yegi, Nick Golden, Paulo Tolentino, João Barbosa, Jules Price, Edward Hall, Edin Bronner, Franca Bortolotti, Gabriel Pons Cortez, Ursula Litske, Denise Cook, Scott Zachary Fish, Tim Duffy and Trader in NYC. My producers Izar Webb, Jim Frank, Lucas Stafiniak, Ian Gilligan, Luis Caetano, Tom Vanagdam, Curtis Dixon, João Linhares, Benedict Mueller, Vega Guidi, Sardus France, Thomas Trumbull, and Nuno Welder. And my executive producers Michel Rugieski, Rosie, James Pratt, Matthew Lavender, Sergio Codreanu, and Bogdan Kanivets. Thank you for all.